Yo guys, good morning. I This is the official start of the stream. Today is the official start, again the first day of the stream, and I'm just going to say a few things before I start, right? And for some of you would be listening late. Actually, currently there are like 40 subscribers on the channel, and only one of them is on the stream, on the broadcast. So just coming, I'm trying to set up something. Okay, yeah. So like I've said in other videos, some of which you may not have watched, but um, it never hurts anyone to learn a new skill, right? I mean, I'm big on skills. I've always tried to learn as much as I can, right? And then when you do this enough times, you're able to identify patterns, and then learning just comes to that. You've learned more, and there were certain ways you went about it. And first of all, you're even changed. Like your brain is changed. Your brain is now more capable of absorbing new information, and like you generally become a better person and a more efficient person, right? So this stream is just an attempt to share what I know. Just want to share what I know with you guys, and that is right now it's for how to trade the market. I mean, this is beyond making money. This is all about pattern recognition and identifying patterns and knowing what to do when you see certain patterns. And also this helps you manage your fears, right? So if you know what the next phase is going to be, you're not all that scared, because you already know the pattern is going to repeat. So you're able to anticipate and take actions accordingly, right? So that's one of the things Forex trading teaches you. And then the next thing it teaches you is managing yourself, managing your emotions. There's certain psychological blocks we all have, and we think that's all we are. Like, that's all we can be, right? I'm scared. I'm curious. I find it hard to make decisions. I can't make decisions on my own. I get paralyzed when I'm scared. All of those things. But like that's not destiny. It's something that can be trained. We are like animals. I mean, we are animals. We say we are higher animals, and evolutionarily we've evolved to always watch out for the negative things in our environment, right? We've always looked out for the saber-toothed tiger that might be lurking outside our caves, and as such, we are trained or programmed to flee the instant we sense danger. And this whole decision paralysis we have now, I doubt it existed back then, because if you're faced with danger and then you're paralyzed out of fear, you're going to die. And we all know if that happens enough times in the generation, those people tend to die out. Like people who are scared of decisions will tend to die out. Same thing as those who are unable to survive certain illnesses. They just die out of society, and then the stronger ones continue to get. So the difference between us and animals is that we can be trained. Animals can be trained by us, but we can train ourselves if we want to. Alright? So that's what I'm doing this live stream. I've not always been the best person to engage in things like this. Just like starting out, so when you're learning how to fly, for instance, and you're just among everyone in the pack, you're wet and heavy, and you can barely pull your own weight. But with time, you tend to shed all those weights, and then you're able to do this thing. So this is actually going to be a fun ride, and like you're going to realize a lot of things about yourself you never knew existed, you never knew were there. All right, so I'll just get right on into it. So Forex is foreign exchange for short, and it's just you trading one currency for another currency and making profit off the difference from what you buy and what you sell. So if you sell, I'm just like using broad narratives right now. If you buy something for 1,000 naira, or let's say $1,000 for instance, and then you sell at 3,000, you're making your profit off the difference between 3 and 1, which is 2, right? So just like every other market, Forex market is not different. And what we tend to do is try to understand when the trends are changing, because you're not the only one in the market. Like, it's a global industry where There's many people with much more money than you who have the potential of pushing the market wherever they want it to go. So you're just trying to get on the trend, and that's why it's important. That's why this video is actually the foundation of trading the market. And what I'll actually be talking about is what we call market structure. All right. So I'll just take you to the charts and I'll just explain a few things. The stream is going to be airing for just an hour, and see you guys, there. So I'm just gonna share my screen. All right. I hope you all can see me. I hope you all can hear me. I would love to see some charts if you can hear me, and if you can see me. So I'll just yeah. So if you can see me, just leave a message in the chat, as I know you can see me and you can hear me, and you're getting the most from this stream. All right. So first things first. So I made a few illustrations to explain market structure. Market structure is just so first of all, when you start trading for the first time, you start trading for the first time, most of us came into this thing by seeing an ad on YouTube or somewhere else, and then they tell you deposit $10 and make $100. The ads, the person just clicks buy or clicks sell, and then the person makes money. But in reality, it doesn't actually work that way. You have to understand certain things for you to make this prediction correctly. And yeah, so that's what I'll be teaching you generally. And when you upload the chart for the first time, you're bombarded with these different things going on. You're seeing charts, you're seeing stuff moving all over your screen, and then you're seeing colors changing, green to red, red to green, and most times you get paralyzed, you don't know what's going on, and that's why you're seeking information, right? So market structure is basically a visual representation of what the market is doing, whatever the market is doing at the time, what you see, right? And you're able to identify the structure, you know what to anticipate. Okay, so I'll just do a few things now. Let me give you guys something. I have a code now. I have a hold on. Just do this. Live. I'll just take this out. Okay, quick check. Ah, man. I'll do the same thing here. I'm just gonna do this. And also, I'll go to need to find a way to just manage all of this. Um, anyways, so basically, that's what the market does. It just has different phases in which it moves in, and then it just helps you anticipate what to expect, right? And if you understand this, there's no how you won't be able to make money in the market. First of all, you're even going to be a better trader because this is the foundation. You need to know what you're doing to even start doing what you need to do. All right. So, um, yeah, let me just have to share this. How do I get this? Oops. Okay, so the market moves two ways. It can only move two ways. It's either going up or it's coming down. And as we know, this is what happens to price. Basically, what's happening in market is just price. It's called price action. So that's the only thing that goes on in the market. Price action, price action, price action. Whatever you're seeing on the chart is directly correlated to price. So when you look here, when you look on the chart, you see why is this not showing? Oh, still saying that. When you look on the chart, what you see on the chart is a bunch of red and blue. For if you're opening your chart for the first time, that's what you see, a bunch of red and blue things just moving around your screen, and we call that candlesticks in Forex. We call it candlesticks, and these are just visual representation of what price is doing. So you can see it's like a graph. If you look at the right hand side, you're seeing all these numbers you're seeing here are price, and you see from the bottom to the top is increasing. So price increases as it goes up and decreases as it comes down. While on the bottom axis you're seeing time. So this is time against price. So basically what you're seeing on the chart is just how much price moved, how much price fluctuations occurred within a given time, right? And that's basically what we see on the chart, right? And as this course progresses, we'll get to understand what this is. Okay. So when you go to the market, what you are trying to find out is how much you're actually going to buy or to sell, right? And you always want to know what the price is. If the price is lower and you buy when it's lower, you actually make profit because maybe the price was higher at some point and then you are now buying when it's lower, so you're like shaving off some of the cost. Okay. So when you come into the market, you want to know what price is going to do. Is it going to fall or is it going to rise? And if price is actually going to rise, you want to buy and hold. So when the price increases, you now close your trade and then take your money, right? And that's what I'll be explaining. So like you can't know if price is going to rise or fall if you don't understand the market trend. Okay, so I'm just gonna do that now. So when you look at the chart, the market usually takes these two forms. Either it's bullish or it's bearish. Now bullish means it's going up, and then we say that market is trending upwards. So it's an uptrending market. Okay, and in an uptrending market, there's certain characteristics we want to look out for. Like the moment you see this thing, we know what the market is doing. Is the market creates a high, it comes back down, creates a low, and then it goes up to create a higher high. So it breaks the previous high, right? Comes down, and when it breaks the previous high, we call it a break of structure, right? It breaks the previous high, swings all the way to the top, swings down from a higher low. Then another low, or it's lower than the previous, it's higher than the previous low, so it's a higher low. And then it goes up, makes another higher high, a new high higher than the previous high. And then it comes down to make another low higher than the previous low. So it's seeing higher highs and higher lows, and higher highs and higher lows. And then we say that's a bullish market or an uptrending market. Okay. So that's for the bullish market. Whereas for the bearish market, this is what we see. Market starts from the high, it comes down to make a low, it goes up to make another high, but this new high is lower than the previous high, so it's called the lower high. and then it drops down, breaks this previous low to create another low. Sorry, to create another. No, this is wrong. This is wrong. This is supposed to be a lower low, and this is supposed to be a lower high. So it keeps making lower lows and lower highs, right? And then a good way to look at this is imagine you're going up the stairs. Going up the stairs is you going upwards, so that's you trending upwards. You're going to have to put a foot on um one of the what's it called, flight of stairs. Like you're going to step upward at first, so it's a high, and then you bring your leg down to step on the whatever it's made of, the stairs, and then you take another foot, you raise it upward, and then you bring it down. So you keep going up and down. You're actually going high and coming low, but each high is higher than the previous high, and each low is higher than the previous low. So that's higher, higher, and higher lows. Just think of the market in this way. Same thing as the bearish market. When you're coming down the stairs, you keep making highs and lows, but each high is lower than the previous high. So eventually you come down to the bottom of the stairs, right? So that's for this is like the basis of the market. Okay. So now there are certain things I would like to point out. When the market pushes, we call it a swing. Like it's one quick brush just sweeps to the top. We say that's a swing. When it comes down, it's a swing. When it swings up, it's a swing. So we have major swings in the market, and these are the points to mark out at high highs and higher lows. Okay, but inside this swing, the market doesn't just move like this, and we'll see that when we go on to the chart. It doesn't just move like this. You have something like this is what it looks like. More realistically, you have the market moving like this. But when you train your eyes enough, you now get to see that is what we're talking about. Okay. But anyway, so these two visuals are saying the same thing. This was this low is this low, and then the market made a high, which was this point, the highest point it's made, right? And then it came down to make a low, which is the lowest low, and then it went up. But you're seeing this different like price movement inside. So we call this structure. Like I said, this market structure. Whereas here we see substructures, like small structures within the overall structure, right? And that's just price moving up and down and moving up and down and moving up and down. So we will get to understand this in a minute. For most of us already know what this is. For some people, they already know what this is, right? So I'm just going to go in depth in a minute. Why is the minutes of this messing up? So, yeah. So let me just quickly show you what the chart looks like first in a bullish market. Quickly find one. That's page 4. So you can see like there are different time frames up here. So each time frame you select is just going to show you what happened within that time. So if you select a 1 hour chart, every candle you see took an hour to form, and then that just tells you, each candle captures a time frame. Basically, each candle captures a time frame. Yeah. So when you look at the market here, now you can see this low. Just pick any random low to start with. This random low. Then from this low, price went up to this high, right? And then from this high, price came back down to form this low. So we'll have this low. And then price went up to form this high. So you see it's a new low, but this low is higher than the previous low. This high is also higher than the previous high. So you can see bullish market trend, and it's in an uptrend. So it's going up and like just keeps going up, like someone climbing up the stairs, right? And as you can see, this swing from, let me zoom this in. Let me just zoom this in real quick. Sorry, give me a minute. All right. So the market went up here, but when it was coming down, you can see it kept making some zigzag movements. It eventually came to the lowest point. And then when it went up to it was the same thing. This is a bigger time frame, but if I should break this down to a smaller time frame, we're going to see the market did this, came down here, went up. You know, same thing here, went up, came down, went up. But overall, this was a low and this was a high. Let me see. This was the new low that price formed. Price formed this low. Okay. And then it went up to form this high. This high. But before it did, like, it didn't just go up in one sweep. Sometimes it goes up like that, but most times you see so these are called substructures. Now if I should zoom, let me highlight this area. Let me highlight this area. Change the colors to yellow. And go down to 1 hour. You're gonna see what I mean. Seeing it out. Escape. Network is slow. Mm. Right. Okay, I still have to do. Oof. It's crazy. Okay. So let me just locate that point in time, which is this. Network is acting up. Let's see what connected. So. All right, so this is it. This was the low we talked about. So this was the low, and then you see price did a bunch of movements. It went. Okay, I just hope you all can see my screen clearly. From this point, price went up, came down here, went up here, came down here, went up, came down, went up, came down, went up, came down. So these are substructures within the overall structure. That's what I was trying to say. And then here too, while it was coming down, it came down, went up, came down, went up, came down. Right. So these are substructures, and substructures are basically, captured price in smaller time frames that now build up to the overall time frame. So if you open your chart at 4 hours, you're going to see bigger blocks of time, bigger blocks of price captured in time. But when you now break it down, that's when you now get to see smaller blocks of price action that now builds up to that bigger block. Hope that makes sense. So that's that for this. And what you want to do with the first thing you do when you jump on the chart is you want to identify the trend, right? Like I said, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Let me look for a lower time frame, a bearish market trend. Oh, this is UBPJPY. Network is acting crazy like that. I'm just gonna post this. Yeah. Done. Okay. So see here, for example. All right. So this is it. At this point, price was high, came low, went up to make a high, but this high was lower than the previous high. So this is a lower high, right? And then it comes down to make a lower low, goes all the way up to make a lower high. It came close to this other high, but it never broke it. It can even come all the way to this exact point, but it's not going to break it, provided this bearish trend is maintained, right? So you keep seeing lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, right? Until price eventually breaks structure. So all this time it was forming lower lows, lower highs, lower lows, lower highs, right? Lower lows and lower highs until this was a high. This was a low. So this was a low. This was a low. And then from this point, price came down to make this new high, created this new high. Market here. There is new high. This. And then it went down to create this new low. Just follow my catch my drift. Okay. So what we're expecting is that this high is going to be maintained, then price is not going to go above it. Price is going to come down. But what price now did here is that it from this low it went up, broke this high, and this just creates a new high, right? Creates a new high here, and then from that point it came down to create a new low overall here, right? So the market shifted from bearish to bullish, shifted from a downtrending market to a bullish trending market to an uptrending market. So you can even see from here now. Initially from here it broke this one, came down, and then broke this one, right? You see the market has shifted, made a new low, higher low, higher high, higher low, and that's why we kept going up. So the market changes structure from bullish to bearish, and your ability to identify this change enables you to switch, from an uptrending market to a bearish trending market. So you're not stuck there waiting for the market to continue in a particular direction forever. All right. So that's what I'll be talking about next. But before I do that, let me tell you about a consolidating market, which is a market that is not bullish or not bearish. No, it's neither bullish nor bearish. It's stuck in a range, as the name implies. And that is when market creates a high and creates a low, and then it remains within, it just keeps bouncing. I think I have a, okay. It just keeps bouncing inside that range. As in this case, market took this low, came to this high, and kept bouncing inside. Eventually, it's going to break to the top or break to the, break downward. But this is what it's like. And then when you zoom into the substructures, you can see something like this inside, right? So these are just same thing. If you see, you can still treat this, because if you look at this, every time the market swings up, as in here, so every time the market swings up here, you have substructures telling you this is an uptrend. However, it's temporary because the overall picture is a ranging market condition, right? And then when the price starts swinging downward, you see a downward trend. So you can still capitalize on this and make money off of just understanding, what the market is doing, right? So I'll show you. Like I said, you eventually break out of the range. This was a typical range. This was a range. There's a range here. Alright. So you see, this was a low, high, low, high, low, high, low, high, low, high, low, high, low, high. Until eventually it broke out, and then so that's what the market does. And this is, I'm going to talk about this in subsequent videos, but it's all called accumulation and distribution. Price accumulates up to a point, and then it stays there for a while, which is a consolidation, and then it distributes, then it stays there for a while, and then it accumulates. Okay, so these are just big fancy words that you get to understand later. Now, the next key thing I'm going to talk about is strong highs and strong lows. All right, strong highs and strong lows. Now, every time the market makes, in an uptrend, every time the market makes a high and makes a low, if this new low is able to push price to break previous high, that low is set to be a strong low, because it's strong enough to push price, to break push price from the low to break the new high. So if the low is not strong, price is going to fall downwards. Same thing if you're walking on the staircase and you put your leg on the stairs, if it's not strong, you're going to fall down. It's only considered a strong staircase if you can hold your weight and push you upward, right? So it's the same thing. You're always looking to see strong lows and weak highs. So this high is too weak. So this low was able to overpower it and push all the way to the top. And this is actually going to be very important for you to truly understand market structure. So you're seeing strong lows, weak highs, strong lows, and weak highs. But at a point where the market now shifts. So initially this was a strong low. The market now shifts downward. This this is a weak high. But let's say price is now this is not supposed to be a strong low because price is expected to break this. But if price fails to break it, it becomes a weak high. Sorry, it becomes a weak um low, right? This now becomes a weak low because this low is not strong enough to push price above this high, right? And then price now comes and breaks. So this makes it, because this has been able to break this low, this point is now called a strong high. I'm going to keep using these terms so you're going to understand, and hopefully you guys can like drop your questions in the comment section if you're lost, so I'll be able to answer them, right? So yeah, so that's that about strong lows and weak highs. It's the same thing in a bearish market. Just cause this high is strong enough to break this high, to break this low, it's called a strong high, while this is a weak low. So you get to see stronger highs and weaker lows in a bearish market. This is all going to make sense. This is all going to make sense. Just stay on my tail. Alright. So I'm going to show you some chart examples. Let me move this out of the way. So you just have to have a trained eye to see this thing. You have to practice, just spend time on the charts for you to be able to. That's all. So I'm just going to pick a random point in the market. This point is a low, and this low broke this high, pushed it upwards. So this becomes a strong low because it broke this high. This high is a weak high, and then let me use. Okay, so it did this, and then formed what, a weak low, a weak high rather, because so when price, okay, so what price it was, had a high, had a low. This low broke this high, making this low a strong low, right? And then this high came back down to form another low here. This same low went up to break this price, so this low was now another strong low. This high became weak because it's not strong enough to hold price. So price went up, made another high, came back down, made another low. This same low broke its overall high. So you keep seeing strong lows, and weak highs in an uptrending market. So what you want to do is whenever price comes down to form a new low, you want to take a buy position or a long position. And if you take a long position at that point, you're going to make money as the market goes up. Okay, so you keep seeing that strong lows, because each time a new low is formed, it breaks above the previous high. So those lows are always strong lows. Okay, now we keep doing that until we get to a point, which is this. Okay, so this was a strong low because it broke this high. This is a weak high. Let me change this. Let me change this to 1, right? And then from this strong low, price swung all the way to the top to form this high, right? And then it came down to form this low. So ideally, we're expecting this low to be strong. Expecting this low to be strong because it's an uptrend, and then it's supposed to push all the way to the top and break this high. But in this case, it came up here, failing to break this high, right? So because it failed to break this high, price now came down and broke this low. Okay, now what does this mean? This high is no longer a weak high, it's now a strong high. And this low is no longer a strong low, it's now a weak low. Now went up, this is now a strong high, because strong highs are able to break weak lows, while weak highs are unable to break weak lows. Strong highs break weak lows, strong lows break weak highs. So this is now a weak low. I just hope this breeze is not. I think I should close this. So that's what we kept seeing now from this point. So price changed, went up. Now this is a substructure. This is an overall swing high. This is an overall swing low. In this swing high, we had substructures, right? And then when price was going up, Some people might be get confused and say, "Oh, this high broke this high, so we are now changing to an uptrend again." That's not the case. Provided this high they take out this high, we are still for the downtrend, right? So you can see here how price kept moving. Another another strong high was created because it's strong enough that it broke this week, came back down. You know, all of these points can still be considered. So you see how the market keeps alternating. See highs and lows. That's what you want to look out for. This is your first task to be able to identify. Train your eye. Just go through all the charts, any chart you can find, to be able to identify, uptrends, downtrends, weak highs, weak lows, and then that's actually an assignment for anyone watching this video. You do that enough times, you get to um you get to see these things for yourself. It becomes easier for you to see in the market. Okay. And yeah, I'm just going to okay. So that's that for this. I'm going to show you what you do in these market conditions to make money. Let's say you're in a bearish market. Let me clear all of this. So for those who are just joining, for the one person who's just joining, you're welcome. I would love you to just like leave a high in the comment section. I don't know who you are. I would like to know you. All right, so I'll just take this out, take this out, take this out, take this out. It's actually hectic clear. I don't want to clear all my drawings automatically, so I'm going to all right, so let's say in an uptrending market, you met the market when the market was here, for instance. You met the market when the market was when the market was here, right? And when the market was here. Let me just the line. The line here. You met the market here. So you're trying to anticipate what the market is going to do next. Now you know market has broken structure. Okay. So you're waiting for it to come down because anytime market pushes, makes a swing, it pulls back. It pulls back like this. Does this, makes a swing, has to pull back before making another swing, has to pull back, making another swing. So this is what the market does. The market can never not do this. Okay, so like I said earlier in this stream, if you know what the market is going to do, you can now anticipate and take actions accordingly. Alright? So waited for the pullback. And this was the high that was created initially. This was the high that was brushed. I think there's a new the market did. I think there's a way to go. The market created this high. Then it came down to create the low, right? So at this point, you can take a buy position. Of course, there are so many things you need to have in place to be able to like make better predictions, right? But basically, once the market makes a new low in an uptrending market, you want to take a buy position there and put your stop loss, which is what I'm going to explain. Put your stop loss below the previous low. So in this case, this was the previous low. This was the previous low. So because I said whenever the market is in an uptrend and it makes a new high, price can never come back down to that previous low. If that bullish trend is going to be maintained, okay. So price has to always respect previous lows in a bullish trend because it took money to push price against structure. It always takes money to push price against structure. So that amount of money that came into the market is still there at that point. Then if price should come back to that point, if people put that money, they're actually going to lose the money. So they have a vested interest to make sure that trend continues and price does not come down. That's why that's the safest place for you to pay your stop loss. And what the stop loss order is basically is a program written into the trading platform that tells that prevents you from losing. So let's say that trade was a wrong trade and it now starts coming against you. The moment price comes to that point, it closes your trade and protects your capital. Okay, so let's see this. So Yeah, so that's what the stop loss is. And there's another program called the take profit that tells the program, the trading platform, that when price comes to that point, close the trade and send the profit to my account. You get, so it's just like giving orders to the market to carry out certain things in case you're not there, right? So um yeah, that's that for an option. So you always want to be taking buys, and as you're taking buys, you're going to be making money as the price goes up. All right. You're also going to like pair this with other concepts like supply and demand, other blocks in the fair value gaps and all of that. But for now, I'm talking about market structure. Okay. So price came down. Let's say you're targeting. So like I said, you identify a swing because this is a bullish market. This is a bullish market. Price did this, came down, created this high, and this is a new low. So because it took the trade from this low, you're going to target this previous high, right? The target doesn't change. Now let's go down to the substructure. So you're just trying to catch more of these moves as the market moves. Hello. This is where we are. So it's the overall target. Then the market keeps giving you swing highs and swing lows, strong highs and strong lows, right? So the market came up from this point. I don't know why this is so big. Okay, so you call this first move, and then the market came here, created a new low, right? Broke this high, which is a weak high because it has a strong low. Broke it all the way to this point. So this was actually it came all the way to this point and came back down here. At this point, you can take another trade. Plus, with the previous low, getting the new high. There's so many other things like risk to reward I'm going to talk about. For now, I'm just trying to explain a point. And then the market comes down because it has created this strong low that broke this weak high all the way to this point. It has to pull back, like I said, to form a new strong low. So it came back down, and then you just have to take another stop loss below previous low. And that's how you keep going all the way to your previous overall swing high that you were targeting, which is here. And you see price go there, you get there. So it actually didn't get there. This was the swing low, swing high, swing low, swing high, swing low, swing high. So I actually got that wrong. This is GBPJPY. So for this trend to be maintained, price has to. Let me go to the daily to see the structure clearly. This is why you have to be alternating between time frames. Price is actually going to go there, but at the point where we enter this trade, structure had already shifted here. You know, I was saying, I was just making this analysis just off the where I was at in structure. So price did this low, high, low, high, low. High, low. If you look at this, you'll see that this low was already breached. Okay. It was already breached. Price broke the structure here. So that's why this low is no longer a strong low. This low is now a weak low. And it now has a strong high. So price is never going to come all the way to this top. You get price can never come up to this point anymore. So that's why this target didn't go. That's why the market didn't get to this point. Because we now have a new lower low. So the market has shifted from bullish to bearish. Alright, so what we're actually doing here was just catching what's called a counter trend. We're not catching the main trend. The market is now bullish at this point. So if I was actually going to target I was going to target. I was going to target this point, this high, to this high here, right? And that's for some other reasons that I'm going to talk about in subsequent videos. This was where I was supposed to target, because we know the market has changed. This is how I'm target. Oh, this is a safe place to target, because I would probably still have swung all the way to this point, right? So I'm going to introduce two key concepts called, we already talked about one, which is break of structure. I'm also going to talk about what we call change of character. They call it change of character. And as the name implies, it just like let you know when the market is beginning to show signs that it's no longer going to continue with the current trend. It wants to shift trend to maybe it was bullish and now it wants to shift bearish. So I'll show you what that looks like. I'll just make a quick, like I said, this is a bullish market, right? Then it changed, right? So this is the swing. We have so we have a low, a weak low, and a strong high. The strong high took out the weak low, give us this new weak low, give us another high. So at this point, it just gives us a new low and a new high. We don't know which one is strong yet. So it's only strong if it breaks the previous if it breaks its counterpart. The price came here. This one broke this one. So this high still remains strong, right? So we have another weak low here. Let me just take this colors of this. I really hope you all can hear me. Okay, so we keep having weak lows and strong highs, right? But at this point, the market did something. It broke this structure. Market broke the structure here, making this low a strong low and making this high a weak high. This is actually very, very important, right? But before the market does this, the market leaves signs. It must have left some signs here. It must have left some signs here, and that's what we call the change of character. So what this looks like in real life is you have the market do. I'm just going to like zoom this. Let's say I'm zooming this out. You have the market do this, right? And I'm talking about the substructures. And it came down to below, and then it created something like this. Okay. So this is what is going to fit into this place. Let me change the color to. This is what you're going to find. This is the substructure you're going to find inside before it eventually broke this high. Yeah. You see here, when you zoom in, you're going to see. It's too high. That'll be crazy sometimes. Where's my chart? Where's my drawing? Oh, that's crazy. Okay, so what you're going to see here is that price now made. If you're looking at just the swings, you're going to see just this swing and then this push. That's what you're going to find. But when you now look at the substructures, you're going to see that price made a low, lower lows, lower highs. Like I said, very structural. Lower low, lower highs. This lower high is supposed to come break this lower low, but it failed. So it's now turning into, at this point it still has a lower high, but it's now making a higher low. It has made a higher low here. It now eventually broke this high, breaking this substructure. Breaking these two substructures to form, the first higher high. So you're seeing that the market has shifted from bearish to bullish, and this is what we call a change of character. So this is something you see underneath before it eventually manifests in the bigger time frames. Okay, this is what we call a change of character. Now the difference between a break of structure and a change of character is that find break of structures in the overall swings of the market. The market swings from bearish to bullish That's called a break of structure. But change of character, you find them in substructures. So I'm going to show you an example here. Um, Let me take H4 for this move. Okay, I feel like my chart is already cluttered. So cluttered. Just delete them. And this live stream is going to be lasting for 2 weeks. I plan on doing it for 2 weeks. I'm going to make subsequent streams actually, but for now it's just going to be 2 weeks from 9 to 10 in the morning, 10 to 9 to 10 in the evening. And I'm still trying to figure out how convenient that's going to be for some of you, right? But most of you at this point are not going to be watching the live streams. You're just going to come on and see the live streams after I'm done. So it doesn't matter. So let's say the market was bullish here. It was actually bullish here. It kept doing lows, highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher lows, higher highs, higher lows, higher highs. So this was where the market now broke structure. It broke structure. It broke structure when it broke this point. See, it came down, boom, boom, boom. Pulled back up before it eventually came down. So in this time frame, this is the 4-hour time frame. This is a break of structure, and the break of structure. Always use your trend line because trend lines are more accurate. Broke this. I'm talking about this time frame. So this was the last swing. Okay. Swing low, swing high. Okay. Swing low, swing high. Identify your swing lows and swing highs. And then this swing low went up because price now broke this high from this point. So this now becomes our new low. And then this becomes our new high. Alright. This new high now broke this low. Eventually broke this low. Okay, so we now have we now have a new low here and a new high here. What is a break of structure? But if you're now going to find the change of character, because this was a bullish trend initially, it was going up and then it now shifted downwards, so it's a break of structure. But now your change of character is going to be somewhere inside this point. You get something that signifies that the trend is now changing. So in summary, a change of character tells you when the pullback is about to start, right? I don't know if I'm even explaining this enough. But a break of, so when you have a swing like this, okay, so you have, I told you this was our swing low, swing high. When do you know the pullback is about to start? Because it has to pull back, right? It's when you see something like this, market does this. Initially, the substructures we had this point. I think this is actually a very beautiful example. It's actually a very, very good example. That price to this overall, it's a swing. So it pushed price all the way to this point. But now it wants to start pulling back. You spot the previous low within the substructure, which was this. Okay, and price took it out. Boom. So this tells you that this is now a pullback. It actually did it here. It came down, went up, created this low, went up, created this high, eventually broke this low. That's a change of character, not yet a break of structure, because change of characters, like I said, are found in substructures. While break of structures are found in the overall swing structures. We have substructures and swing structures. People call them fractal. This fractal structure, but you get the point. Like swings, the substructures build up to swing structures. You get, so you find change of characters here, change of character here. So this tells you, oh, this pullback is about to start. And then if you want, you can capitalize on that because you know This is just a pullback. Stop loss is going to it's a sell opportunity also. Stop loss is going to be there, and then you just target the previous area. You know, you can just even target from this low that was broken. You can target this previous low, and then just take someone 2.7 risk to reward. So you're risking one part to get 2.7 units of the amount you risked. Okay, so you can do that, and then every single time it keeps like it's the same thing, market structure, but on a smaller level. You get. So I'm just gonna show you this. So how do you know the pullback has ended? You're also going to find another substructure. You're going to find another substructure. Now let's investigate this point where price turns. I don't want to go lower. I don't want to go a time frame lower, because if I do that, the chart is just going to take me all the way to the hard locating this point. I think I should just do that so you understand what I'm saying. Let me just highlight this point and go down to 15 minutes. I just want you to have a better understanding of this stuff. So when you go backward, all right, you see this. Okay, see this. Great, beautiful. So this was the first swing I said we were going to put. This was the first swing we cut, right? Sorry, the first pullback. So this whole section is a pullback. So when price came here, we can now start seeing change of character. So there's a lot of like, see what this looks like. The market printed is low, printed high, right? Printed is low, printed is high, printed is low, printed is high, printed is low. Okay, and then it now came up to try to take out this high, but it couldn't. It didn't take out the high here. So this is now what we call a weak high. Initially, it was all weak lows, so it was all strong lows and weak highs, because the lows kept taking out the highs. But at this point, the low couldn't take out the high. Instead, this high now took out this low. So you're supposed to be anticipating, okay, this pullback is going to continue downward, right? Because the trend is changing. On this time frame, the trend is changing here. Okay. But now, see what now happened. We now saw that this low is being maintained. Where's my eraser? We now saw that this low, let me just take this out. This low is being maintained. This was the lowest point price came to initially. So we're just like we're still watching. It's not we're not sure yet where the pullback is going to end. So the first sign that the pullback is ending is when price came to this point, failed to break it. Instead, it went up and broke the structure here. It's actually very simple, but you just have to get it, because price was doing strong lows, strong highs, weak lows, strong highs, weak low. So when price printed this strong high, this high, we're expecting it to be strong enough to push below this low. But also that price came here and failed. You see this candlestick, you see the wick under the candlestick. Price just rejected from this level, all right, and then pushed up to break this high. Swung all the way up to break this high. It's also called a change of character. It's also called a change of character because it's telling you the pullback has ended. Price is now going to start trending upwards. So this is where you now start looking for your buy opportunities within this level. This is where you find buy opportunities. So character has changed. So what you're now looking for is what you're not looking for is buy opportunities. You're not looking for swings. You're not looking for lows to be formed for you to take your buy. Because I said you always buy at the low, sell at the highs, right? So when price broke this here, right, you now wait for price to pull back. And if you keep going lower to somewhere like the 1 minute, like keep going lower in time frames, you're going to keep seeing change of character, but you have to build the story from the bigger time frames for you to get an idea of what's happening. If not, you're just going to get lost. If you stick to the lower time frame for too long, you're going to get lost. This video is already 1 hour, or it's over 1 hour. So I'm going to end here, and I'm going to see you guys in the evening where I'll just do a recap of what I've done this morning and then progress from there. All right. So market structure is very key, and what you need to know is first thing you need to do when you hop on the chart is identify the trend. If it's going up, if it's coming down, if it's consolidating. Overall, it's actually going to be going up or coming down. Consolidation is just a phase in the market where you have the market just taking a break, just resting to eventually push again. And um, yeah, so identify the market trend. Spot your swing lows and swing highs. That's what's going to enable you identify market trends. Spot points where price broke structure to know if the market is shifting from bullish to bearish, and then also you look for break of character, change of character. So these are all the things that enable you know where to take your buys and take your sales. As the course progresses, as the stream progresses, I'll see you guys in the evening, and then you'll be able to understand this thing more and more and more and more. So you're welcome. I really thank you for joining us. And if you're actually watching the recorded version of this stream, same thing. You're welcome, and I hope to see you in the next video. Bye. Bye for now. See ya.